The S&P and the Dow kind of pulled back a little bit today, but notice how the Dow is now getting into the oversold area. Makes it fairly evident or suspicious or logical. There might be a support area right here where it congregated before. At the same time, the NASDAQ had traded up higher today and backed off a little bit. Still probably in a downtrend, but notice it might be supporting right in this area also. Start watching for, especially on an inverted hammer in the NASDAQ. Remember, a positive open after an inverted hammer has an extremely high probability of the price moving higher. The price patterns still continue to be the strongest trend movers. Notice in a fry pan bottom that there's still positive trading in spite of which direction the market is going. This is just a very simple conclusion that the price pattern has something independent developing the pattern versus what the market is doing. Our recommendation on RPTP is still stands because this makes for a very good probability of a breakout to the upside. And the same chart patterns on the reverse side work just as well. Notice our shooting star signal right here on the 50. Our recommendation for shorting DK was based upon the little hanging man gap down and then another gap down that took the price back below the support level, and today's shorting continued that trend. So if this was wave 1 over here, wave 3 could take you all the way down into about the $20 range. Having the ability to see what the patterns are showing us and knowing that these patterns have worked time after time, decade after decade, century after century, human nature does not change. The price patterns will still continue in the direction of what the signals and patterns are telling you, especially knowing that the T-line acting as a very strong resistance level followed by gap downs tells you you're in a downtrend as long as there's no close back up above the T-line. That'll be it. We'll see you in the chat rooms.